So we know what is depreciation, and the next one was the methods of depreciation. Which are the various methods by which we find out depreciation? That was straight line method and written down value method. Now, the accounting treatment. Accounting treatment means how is this depreciation recorded in the books of accounts? Okay, in the accounting, in the books, how do you record this depreciation? Okay, here also we have two methods. Two methods of recording depreciation. Okay, we have two methods. The first method is charging depreciation to asset account. Okay, that is the first method. I'll explain to you. Second method is creating provision for depreciation. So we have two methods of recording depreciation. First method is charging depreciation to asset account. Next method is number 2, creating provision for depreciation. Now, please listen to these terms, the names of the two methods. Understood? Charging depreciation to asset account, creating provision for depreciation. Fine. Now, this depreciation, it is actually an expense. All these expenses, all the expenses of the business, it will be recorded in profit and loss account. You remember profit and loss account? Profit and loss account, we record all the expenses, indirect expenses and losses, in order to find out whether the business is making profit or not. Okay? To know whether the business is making profit or not, the business will prepare profit and loss account. So how will you know whether the business is making profit? From the incomes that you get, you're getting so many income. From all the incomes, we will reduce the expenses. That is how you get the profit. We will be getting so many income. From that income, we will reduce all the expenses. That will be the profit. So this process of finding out the profit, that is done by preparing a profit and loss account. Is it clear? So there is a account called profit and loss account. Okay, we'll be learning that in detail very soon. After 2 chapters, we'll be learning that. So in the profit and loss account, we will be recording all the expenses and incomes. Incomes minus expenses will give you the profit. Okay, coming to depreciation. Depreciation is an expense. So where do you write this expense? We will write this in the profit and loss account. I told you, no, in order to find out the profit, income minus expense should be done. Depreciation is an expense. So we will be writing that in the profit and loss account. Then this depreciation, where is this getting affected? This means it is reduction in the value of asset. So to find the value of asset, what should be done? Asset should be reduced. Asset minus depreciation. That will give you the value of asset. Anyways, coming here, we have 2 entries in this first method. We will have to pass two journal entries. How many? Two journal entries. Alan Thomas, please keep the video on. Yes. Okay, Alan? Based on the first method, charging depreciation to asset account, we have two journal entries. First journal entry is depreciation account debtor to assets. That means we will be preparing an asset account. Asset account. Asset account means what? Ledger account. Account means what? It's ledger, no? T account. Forgot? Okay. So we will be preparing an asset account. In that, we'll be showing this depreciation. We'll do the problem, then you'll understand better. So first journal entry is depreciation account debtor to asset. So what do you understand from this? Depreciation is an expense. Expense increase, we debit. What is happening to the value of asset? Value of asset decrease. That's why we are crediting it. Okay? That is the journal entry. Depreciation account debtor to asset account. Now, closing of depreciation account. Now, this depreciation account should be closed. How will we close it? To close the depreciation account, we will post it to profit and loss account. I told you, as it is an expense, we will show it in the profit and loss account. These are the two journal entries related to the first method, that is charging depreciation to asset account. Okay? Now, coming to the next method. Next method means creating provision for depreciation account. That is the second method. Creating provision for depreciation account. Here, we are not reducing this from the assets. We are not showing this as reduction from the asset account. Instead of that, this depreciation, no, that amount calculated depreciation, that we will be putting it in another account. We are going to place this depreciated amount, depreciation amount in another account, which is called provision for depreciation. Earlier, in the previous method, what did we do? Depreciation account debtor to asset account. We charged it to asset. But according to this method, we are putting this provision, this depreciation amount in another account, that is provision for depreciation. Okay? The next entry, again, it is the same. Depreciation, it is an expense. So, this should be transferred to profit and loss account. Okay? These are the 4 journal entries. 2 journal entries related to the first method, 2 journal entries here in the next method. Okay. Okay. Here is the question number 1. First, let us read and understand the question. Okay. On April 1st, 2010, Bajrang Marbles purchased a machinery for 2,80,000 and spent rupees 10,000 on its carriage and rupees 10,000 on its installation. Okay, so the purchase price, the price in the tag, the machinery, price of machinery is 2,80,000, but they have spent additional 10,000 on its carriage and 10,000 on its installation. Okay. It is estimated that its working life is 10 years. So we have an estimated time period. We expect that this machinery will work for 10 years. Okay, our expectation, estimated life of the asset. Remember factors affecting depreciation? 3 factors. Remember that? First one was cost of the asset, estimated life of the asset, second one, and estimated scrap value. These were the 3 factors affecting depreciation. So here you found cost of asset, then we have estimated life period of the asset, that is 10 years, and after 10 years its scrap value will be rupees 20,000. So the estimated scrap value is 20,000. These many details are given to you. Okay. Now, prepare machinery account. So you will have to prepare machinery account. Machinery account means the normal ledger account that we prepare. And depreciation account. Okay, depreciation account. So machinery account should be prepared. Depreciation account should be prepared. For how many years? For the first 4 years by providing depreciation on straight line method. So here depreciation is provided using which method? Straight line method. That is your question number A. Then you are also asked to prepare the same machinery account, depreciation account, and provision for depreciation account for the first 4 years by providing depreciation using again straight line method. So using straight line method, we are going to prepare machinery and depreciation in first method, that is charging depreciation to asset account, and also in the second method by opening provision for depreciation account. Is the question clear? Did you understand the question? Yes? Okay, let's start doing it. The first thing you need to do is find out the cost of assets. I told you cost of asset is not only the price of the machine. It will also include the installation charge, whatever additional charges have been incurred for making the machinery function in your business. Till that machinery is brought to the business and it starts functioning, up to that time, whatever costs are incurred, whatever expenses you incurred, that all will be added along with the purchase price of asset. So the first thing to do is to find out cost of asset. Yes, cost of asset. What are the details given to you? Purchase prices 2,80,000. 10,000 is spent for carriage. Carriage means transportation. Carriage for 10,000 is spent for carriage. Then for installation, for installing that machinery in the business, another 10,000 is incurred. Purchase price is 2,80,000. So what is the cost of asset? Cost of asset is equal to 2,80,000 plus 10,000 plus 10,000, 3 lakh. Okay? This is the first thing to do. Now, next we are going to calculate depreciation. Depreciation. This is the formula to find out depreciation under straight line method. Original cost minus scrap value divided by estimated life of asset. Okay, this is the formula and we have all these details in the question. Yes, Alan, is it clear? Are you getting it? Okay, good. So, what is the original cost? We found out 3 lakh. Yes, 3 lakh is the original cost. Okay. How about the scrap value? How much is the scrap value? It is there in the question. How much is the scrap value? 20,000. Yeah, 20,000 divided by estimated life of asset. How much is it? 10 years. It is given in the question. So you are provided with all the details. So that is the next thing to do. Depreciation is equal to original cost minus scrap value divided by estimated life of asset. I hope you are doing it. Question number 1. Okay. Question number 1. Yes, I stopped with this. The account preparation, we'll do it in the next class. Okay. So find out cost of asset and also depreciation.